Good morning. Hi, this is Vance out of the Seattle area. It's Thursday, May 26, 2016. Good morning to everyone. Yeah, it's interesting. I think we're on the verge of a little bit of a change here. We've been kind of in a uncertainty range for a couple of weeks. But let me first deal with oil. As I said, when oil was in the $30 range, it was decided by industry leaders and the powers that be that $50 to $60 a barrel was the right price. This made it worthwhile for producers in America to be able to afford to get the oil out of the ground and make a profit. And at the same time, it was felt that the rise in gas prices to that level would not change consumer behavior in a significant way. So they literally decided that between $50 and $60 was a good balance, and this would create a lot of jobs as well. Well, here we are at $50 a barrel. Now, I wouldn't expect it to rise above $60 anytime soon, just based upon that information and logic. Now, onto the US dollar. The name of the game, as you always hear me say, with the Fed, with the bankers, is stability. That's more important than anything else. We're an interdependent world. You know, companies are invested in many different countries all over the world. They're invested in us and so on. So an ever-growing stronger dollar is not great. An ever-weakening euro is not great. So stability is the most important. The euro and the pound have had a lot of gains since April, and essentially, or I should say, and reached the top of their range, their daily range in April. I suggested then that you would be hearing the story change no matter what the data was. And you did. And so now the question is, what will Yellen say tomorrow? Will she be hawkish? It's very likely that her language will lean towards a hawkish tone. Not more than a month ago, the entire world market wouldn't believe for a second they would at all consider a rate hike anytime soon. It's because when they're going the other way, the talk is all negative about the dollar and positive for the Eurozone. But as the GU and EU reached higher, that's pound dollar and euro dollar, you saw Fed members begin saying things just to the contrary, talking about how the US economy is on track, how rate hikes are not out of the question. And as that was repeated for a second week, the euro began to drop. And this is what they do. But always keep your eye on the main goal, which is stability, because this is the primary motivation for what they say and do. Really, this is the driver in the FX market. Now, normally I would say that Yellen would be totally neutral, but I think given everything that we're seeing, she's going to lean towards a bit of hawkishness. The EU and GU are just solidly high in their ranges, and Yellen can't afford to risk them going higher at this point in time. Okay, so let's take a look at the GU first. As you can see, we've got this long trend, and what I was going to say is already happening. I wrote up a couple notes before I talked, but you can see this move has gone 256.7, and you can see that it's getting very close to the high of May 3rd. So it's really reached high. But here's the main thing. Right now, this is a huge trend. Let's look at that number again, 254. Now, I gave you all the fundamentals that basically say that this should not be going up. Okay, so I think the fundamentals are pointing towards a pound dollar moving down now. And in addition to that, the Brexit polls, which have driven the pound dollar up, are actually in favor of the UK not leaving the union. So all of the data is pointing towards this being an unjustified move up. Now, that said, I just want you to know, I want to repeat that the UK is doing an extraordinary job of planning for the next 15 to 30 years by preparing their children for the jobs of 15 and 20 years from now. They're probably doing a much better job than the United States. So long term, they're looking really good. But right now, you know, their numbers just don't, in terms of stacking up with the United States, they look relatively weak. So everything's pointing towards the pound dollar coming back down right now. All right, now let me see. Now, I just want to comment real briefly before I go into more specifics. I want to comment. You see the euro's been going the other way. Oops, that's the pound. Let me go to the euro. Euro's been moving up. Pound continued to move up. What I wanted to, I'm saying the opposite of what price is doing right now in terms of the fundamentals, and I'm just telling you what I see. Why is the euro dollar moving up right now? Well, the primary reason for that is profit taking ahead of Janet Yellen speaking tomorrow at 1:15 p.m. Now, notice the unusual timing of 1:15 p.m. on a Friday. She usually speaks on Wednesday, sometimes at the latest on Thursday. So what's going? Why 1:15 p.m. on Friday? Well, most traders, investors in the two biggest hubs, which are London and the United States, are gone for the weekend by that time. That means that they have to position for uncertainty before they leave. They can't stick around, and I mean they could, but they're not likely to be there to speculate on whatever information is released. And so basically today they're taking profits and positioning for being basically gone when Yellen speaks. So that's what's going on there. Okay, so now let's get specific again about price. Pound dollar, even if we didn't have any fundamental information, you got a 270 pip trend with virtually no pullback. Now this makes this area right here very attractive, and I will say to you that there is an increased probability that you will win this trade if you take it as it comes through this area. And what I would look for is a close on the 5-minute level, 5-minute chart below this level. Now, looking out this far, I actually like exactly where I have this level. Let me just tighten this up a little bit. Whenever there's just one drop below, I ignore that. You see this reconciliation here, here, and here, showing very clearly. So what you're looking for here is a change below 146.86. Exactly. And so a 5-minute candle close below this would suggest that this is going to continue down a little bit more of a correction from this trend. Now that, as you can see, that hasn't happened much in the last couple of days, but that is what you'd be looking at. Now, that said, anytime you're going against the main volume of money, it's kind of like, you know, a raccoon going against an elephant. You just don't want to, well, put it this way, your risk is increased when you go against the higher volume of money. So that, to me, this is unattractive, at least for now, just because the risk is increased. All right, so let's move over to the euro. The euro started correcting this morning. You can see I put a rectangle here to mark what I think is the key level at 111.89, 111.90 on the euro dollar. Let me start down to the 5 minutes, see what happened as it came through that level. As you can see, when it reached up that level, and this is exactly where it should be, 111.90, you can see it halted right at that price, and then as it took off, it zoomed through. And how much was that move? It went up, 13 without stopping, and then it went literally up 28 without stopping. So this bus kind of left. Now, how would you trade this? I actually would not trade this. I would be looking for just a little bit higher close. Remember, most of the market, it doesn't know to look for what I'm showing you. But if there was a 5-minute candle close right in this area, then it'd be very likely that this would continue. But the most important part is if you enter up here where the bus has already left the station, if you're going for a profit of X, you have to have a bigger stop to get your stop down below this level. So that's why you want an entry right around here. So if you get your stop comfortably in here, you don't have to go very far to hit your target. One of the things that most traders don't know, I used to ask a question, would you rather have 100 pips or 10 pips? And most traders say 100 pips. And obviously it's a loaded question. The idea is that if you're risking $1 to make $1, it doesn't matter whether you get 5 pips or 300 pips, you make the same amount of money. And so that's all in my book, and I'll talk about that in a moment. But so this is just not a trade I would take. You say, well, Vance, you said here and you didn't make any money. That's one of the things that you have to get around as an eager trader. You have to make your decisions not based on, I need to make a trade and I need to make money. You have to base your decision on, am I managing the risk well? And you know, 95% of the traders have never make this mental leap. It's not about what you want or what you can get. It's simply about having an advantage with the buyers or sellers and being able to manage the risk well. And the more experience you get with this, the more you'll realize that these numbers aren't so unpredictable. For example, let's say we had a close right now on the 5-minute below this level. You know, what are the probabilities that we'll get a 10 to 13 pip move below that and let's say have the stop safe here? Now, if the trend were to the downside, that would be a 90% probability. But since you're going against the volume of money, which is now invested to the top side, that drops from 90 to more like 75 in this particular context. And it's probably a little bit lower. And some of the reasons are, if you're trading against this level, you know, there's going to be buying interest. And this trend has been moving for a while. You can see they got in early at the 50% here. They got in at let me just go with that, 50%. They jumped in early again. So there's a lot of orders sitting in this area. There'll be orders in this area where you see this former level being broken. And then at 76.4, there will be even more orders. So what that means is when you're trying to gain X number of pips in here, it's going to take longer usually because all the selling has to overcome the buy orders. And what you see here now is not a lot of sellers. What you see is buyers taking profits. And when they close out their positions, this makes price drop. The sellers haven't actually entered the market yet. So let's see. Let's go to the euro again. One of the things you could consider is a trade right here. And let's just explore that for a moment. 38.2 is a very popular entry because as they take profits, if the trend is strong, they normally like to reposition around 38.2, and you can see it come down. A bunch of orders were executed right here, and now they're dropping. Now, you can't just take some symbols and make decisions. You know, oh, there's a pennant and there's a trend line. You can't make your decisions like that. I mean, it's popular to promote those ideas because, you know, the brokers make most of their money from inexperienced people believing they can make money in trading their accounts. That's where they make 90% of their money. But in terms of making good decisions, you have to make your decisions based upon good information and good risk management. And the situation today is we're coming into Yellen talking tomorrow and everything that I talked about earlier. This is just not a good risk right now. Even if this, you know, goes up more today, it's just not a good risk. There's the sentiment, at least the one that I predicted, is for a little bit stronger US dollar. So that's against you. So this is more likely to continue down, and they're gonna pick up some orders. There's gonna be buy orders here and here, and then you're not really gonna see, if this continues down, you're not gonna see some serious seller interest until it just starts to get through here, and then you will. Now some of this is stops. You see this moving. Oh, the sellers are going crazy. No, there's a lot of buyers positioned here, and they've taken some profits, and then they've moved their stop losses. Some are here, and some are here. And so this is, as price moves down, it's picking up those stops. But you'll also see it's picking up buy orders as well. I would say the tendency today is going to be for this basically to continue down. But what's likely in terms of, you know, 12 years of watching this is probably likely at some point here to just go sideways. We're about an hour away from London close, where about 40% of all Forex transactions are executed. So I don't know. I don't think we're going to see much more today. We could. I mean, anything can happen, but you got to make your decisions based upon the information that you have. Let's see. I guess I had a lot to say today. Let me just show you where to get my book. And keep in mind, you know, I'm not marketing anything. I mean, there's a little community for $10 a month that I put there. If you guys want to work together, read my book, work, you know, in a community together. But you know, I'm not going to make any money at $10 a month. You see, when you go to get the book, there's no secret agenda. There's no give me your email. You just click on it and you have the book. That book, this book, when I decided to retire from Forex trading about a year ago, what I wanted to do was leave behind an instruction manual that would basically encompass all of the skills that I had learned and developed, and also share the training knowledge that I gained over time. Because, you know, if I'm not going to train, I at least want you guys to at least have my insights on what I learned over all that time working with traders. It's all in this book. So I would think that most people would read this book and think, wow, that's one of the most valuable books on Forex trading that I've ever read. And it's free. So, and the reason why is because I retired and I wanted to leave this behind for you guys. So you just go to forexartofwar.com. Let me see if we can just highlight that. Forexartofwar.com, and just click on this ugly yellow logo up here. That's about it. I think that you see this dropped all the way out of this area where I said we're going to pick up some orders. You picked up the orders right here. So it's kind of unfolding the way we thought. If we get through here, if you get a 5-minute candle close, then you're probably looking at something more meaningful. But I don't really have anything else to say. If this 5-minute candle would have closed, you know, 6 pips above, 4 pips above, 3 pips above, you would have had an easy trade right here. If this would have come up here and say pulled back right here to 38.2 or 50%, you would have had an easy trade. But this is just boom. This is just them moving in one direction without enabling you to manage the risk effectively. As far as all of the things you've heard me say, it's all in my book. And if you ever have a question, you can email me. It's my name, Vance Williams @myself.com. I guess that's about it for the week. I hope you guys got something valuable out of what I shared this morning, and maybe even got a little prepared for what to expect for the rest of the day and tomorrow. My plan will be back on Tuesday morning. I know my Google Plus page says that I'm doing this at 9:30 in the mornings. I'm really doing it whenever I want, but it's in the mornings, Tuesday through Thursday. So as you can see, there it goes, just exactly like we talked about. How's the pound doing? Did it come through that level? It just did. So let's look at the 5 minutes, since I'm still here, still recording. Right now it's trying to close below that level. Now some are going to be watching this, but I think this is the main level right here. And you've got about about a minute and a half? No, about a minute left before this candle closes. Now, in terms of timing, since there's only a minute left and this is so far below, it's much less likely that it's going to get back in here. So some traders will start to pull the trigger in this last minute for further selling, profit taking, whatever. So you can watch for that as well. It would be extra nice if it closed below this level too, but it looks like that's where it's likely to hold as this candle finishes up. Then again, because it is below this level and so late, you know, what do we got here left? We got 25 seconds left. They're likely to start positioning and moving this down a little bit further. So let's hang on for just a second and see if that happens. I guess the other side of the coin is these guys here are going to keep buying. These machine traders, these programs, they're going to keep buying until it does basically close through here. So there's our level, and just got seconds left. But again, remember, this is the key level, not this one. There it goes. It closed. And so I think that's going to take some of the gas out of the buyers. I mean, yeah, they still see this, but this is one move out of 1, 2, 3. But it'll still probably create a little bit of choppiness, but it's looking like it's going to go down now. Anyway, something you can watch for. But remember I said, when you're going against the volume of money, your risk is increased just because all of the reasons are going to be some buy orders all the way down in this area. All right, so that's it. You guys have a great day, a great weekend, a great Memorial Day weekend. It's a holiday in the U.S. Keep that in mind for Monday, guys. Have a great one. Bye.